Thank you, Kim, and thank you, and thanks for everybody for taking time out of your day to hear and listen about Tax Nexus, particularly as it relates to managing e-commerce Tax Nexus concerns inside of QuickBooks Online. I don't know if you've had to go through that already. You understand the pain that can cause at times. I just want to do a quick check because something just went weird when I started on my screen. I want to make sure everybody, you guys can see my screen okay? Is it displaying properly? Yeah. Gennady shaking his head. Yes. Okay. Awesome. Very cool. All right. So let's get going. So first, we're going to make a couple of introductions, but I just want to get a couple of disclaimers out of the way, if we may. Number one, I am not an accountant, nor a tax specialist. So please don't take anything that I'm going to say today as tax advice. By all means, we believe in what we're telling you to be correct, but you want to obviously, if you're a tax professional, you probably know better than I even. But if you're not, please check with your tax accountant or tax specialist for more details and to confirm your best course of action. The second disclaimer, what we refer to as another disclaimer, we're not going to necessarily, we'll leave time for Q&A at the end, but we don't want to get into any, we won't be able to, I should say, get into any specific use cases that you may have, right? So we're willing to talk to you about it, but we would look to take that maybe as an offline discussion. But feel free to bring up use it as a form to create a general case if you want to have questions answered if it's applicable. But we just don't want to get into any specific, one-on-one use cases during this presentation, and I think everybody would understand why. Okay, so with that, just a couple quick introductions so you understand who we are. My name is Mark Kalman, and with me today is Gennady Kleiner, the handsome gentleman wearing the We Integrate t-shirt in your screen there. So we are co-founders of We Integrate, which is an it's an automated system that automates the bookkeeping between Shopify. Yeah, we have if you guys could put yourselves on mute if you wouldn't mind. I think someone's not on mute. That'd be awesome. I don't know. Do I have a way to control that? Can I put people on mute?
Yeah. I was there actually last year on November.
Are we able to mute everybody? Kim, sorry, if I can just ask you for your assistance here. I don't know if you're hearing me.
No, I hear you. I'm taking care of it.
Yeah. Okay. Awesome. Thank you so much. Thank you. Oh,
no
sorry.
problem.
Okay. Cool. Very good. All right. Awesome. So let me just go back one screen. Sorry about that. There we go. Okay. So back to what I was saying. So Gennady and I are co-founders of We Integrate. It is an app that automates the integration between Shopify and QuickBooks Online. Eventually, it'll be other e-commerce platforms as well, but this is our first connection. It's a newer app. What we do a little differently than some of the other systems out there is we focus on giving you the best of working with details of actual sales and refunds and such. And we know there's different schools of thoughts of details versus journal entries and stuff, but we find that there's a lot of value in the details. One of them being the very topic that we're going to be talking about today. And we're excited about that and happy to speak with you outside of this, session if there's interest in learning more. Some of you may know Randy Johnson. He's on our advisory board. We work a lot with him, and he's been instrumental helping to guide us in the right direction. And in fact, he's actually done a couple of sessions here as well that we've sponsored, and very excited to be able to have him on our team. Also with us today, we have a special guest. So we actually do have a tax expert as part of this presentation, Jennifer Ginther. She's an IRS enrolled agent and founder of Fairwind Biz, bookkeeping and tax solutions. And she's been doing this quite a while, and she's a certified QuickBooks Pro advisor and has a lot of accolades to her name as far as her being the authority that she is. And while I'm going to be leading the presentation, she's going to jump in as we go and call out a couple points here and there throughout our session today.
Thanks, Mark. And my camera's not working, so I am here, but I'm trying to work on getting that going.
All right. Great to have you.
Thanks.
All right. Awesome. All right. So we break into this today's session into a few different groups, different sections. The first section, we want to just give a general overview of sales tax compliance, right? So when we look at that, there's primarily 5 main steps when it comes to sales tax compliance, right? And Jen, I don't know if you wanted to walk through this, and then I can
Sure.
I can add.
Yes, yeah. One of the first steps, which is one of the most important, is the Nexus. And I'm sure a lot of people have heard about Nexus, and it's basically kind of the relationship that the company has with the state or, where they're based. And there's a lot, we're going to get into that a little more. Nexus is extremely important. Being able to check whether the product or service, usually e-commerce is almost all products, so they're almost always taxable. And registering at the right time is huge, because there's a lot of people that might register in all the states, and it's a big mistake to do that. And then collection, which would be, after you've determined that you have Nexus, economic or physical, and you've registered, you only want to collect and remit once you've actually registered. So, and then there's a whole process with that, collecting, remitting, and then, filing the tax returns. So, and then the file remit, that's also knowing your filing frequency and schedule, which is determined by, essentially you're going to analyze your dollar amounts and your frequency. So
Awesome.
That's pretty
very good. Thank you. And actually, before we go on to, I just want to point out too, I think Kim mentioned it earlier on, is we, if as we go through this deck, questions may come up. We're going to ask you to hold your questions to the end, but you are welcome along the way. He's going to capture them, collect them. If you drop them into the chat, we'll make sure we organize them and have a nice, opportunity to deal with as many questions as we can during the time we're here today. Okay, so then the next thing we just want to cover up front are 3 common sales tax mistakes that people make. Jen, if you want to go through this.
Yeah, sure. It's same again. We're talking about Nexus. It can't be emphasized enough how important finding, what states you have Nexus in. And there's reports to run to be able to know that. And you can either do that on your own with the reports that you have, QuickBooks or Shopify, but you can also consult a professional. And then again, like I was saying, if you register in every state, that can be a really big problem, because then you're opening the door. Once you register, you pretty much have to be filing, even if you have 0 returns or 0 liability. And then collecting sales tax without registration is another big problem, because then it becomes a trust fund issue with the state, and they don't like it when you hold on to what's essentially their money, because sales tax is really, it's just essentially the seller is collecting tax on behalf of the state. And if you aren't registered and you're not remitting that and filing, that's when they come knocking on the door, and it can be a very big deal, and obviously open up audits and other types of things.
Awesome. Great. Thank you. Okay, so now let's move to the next section, and we'll talk about a review of physical and economic tax nexus, what these are. So in general, right, what is sales tax nexus, right? So this is where you have, basically it's like, it facilitates the connection between, someone that's selling something, right, and someone's buying something, and it relates to the local jurisdiction where you're expected to collect and pay tax, right? Generally referenced towards the seller, right, because that's usually where these activities are occurring. And they're the 2 common types of nexus that we see, and that you probably have been exposed to and have experience with, are physical nexus and economic nexus. Taking physical nexus, right? This is where you establish a relationship for having to pay tax and have a tax obligation in a particular state, based on the fact that, not to be redundant and obvious, but because you have some form of physical presence and you're conducting business in that state as a result, right? So this could be your office, where your business is registered. You could have remote employees, right? Which these days is a pretty big deal with everybody post-COVID working remote. So if you declare an office location with employees being remote, that establishes a physical nexus. If you have a warehouse that you're shipping from, also physical nexus, as well as one or more physical brick and mortar stores also contribute to physical nexus. But bottom line is, anywhere that you establish yourself physically in a way that you represent your business will constitute a physical nexus. When you have physical nexus, you're generally going to find that you're obligated to collect tax in that state. So drilling down a little further, right? Again, sort of outlining it, right? Basically, the bottom line is where your business has a physical location. This location could be of your business employees outside of your state, right? So it could be remote employees. And even if you're temporarily operating, like if you or your clients, right, if you go to a show, right, and you're selling at that show, or you do a temporary pop-up, right? These are all things that could constitute a physical nexus relationship. So now what's economic nexus, right? So economic nexus is, again, it's a matter of establishing that connection between where you're selling and where the purchase is being made, right? But you don't necessarily have a physical presence in that state, and so there's you generally off the bat may or may not owe taxes, and there's a threshold of activities that occur that you would accumulate over time, that at some point you might reach a threshold where you may be obligated. So as an example, you might have an office in New York, and you ship from New York if you're selling a physical product, and someone from Florida purchases from you, and you have no nexus there, you don't have any physical presence in that state. So on the first sale that occurs, you may not owe any tax, you may not be obligated to collect tax, and therefore shouldn't collect any tax, right? But at some point in time, based on a certain number of sales, it could be like $100,000, $200,000. There's specific guidelines we're going to get into in a second, or number of sales that you make. There will come a time where you will, from that point forward, be obligated to start collecting tax. And we'll cover that as we go through the presentation. And to that point, here's an example of the different thresholds. Jenna, if there's anything you want to comment on this map?
Yeah. There are 5 states that don't have any sales tax, and therefore you wouldn't have economic nexus in there. They're right here in the lighter. And then obviously they all have different thresholds and different limits. And so one of the key things is and it's ever changing. So it's one of those things that, usually if you're using Shopify and QuickBooks, those will kind of be kept more up to date. But if you were to research them, there may be times when they like certain states, they'll say, okay, well, we're not going to do 200 transactions anymore. Now it's going to be 500 transactions before you have Nexus. But if you hit, let's say if the dollar Nexus is 100,000 and you hit that, then you're going to still have that requirement to have economic nexus and then register in that state. So you've got kind of all the states have a different take on it, and they're laid out here by color, so you can kind of see that.
Right, exactly. So and sort of just talking a little about how to use this, right? So maps like this are available. To Jen's point, the state's requirements will change. What this is basically representing is that if you don't have a physical presence in any one of these states, but you wind up selling to a customer in one of these states, as an example, these are the thresholds that you would have to reach. So until you reach those thresholds, you'll have no tax obligation, right? Once though you do reach those thresholds, right? You can see some states are 100,000, some states are 250,000, some are combinations of $100,000 in sales and 200 transactions, right? And they're all color coded, so you can see. Once you do hit those thresholds, from that point forward, then you will be obligated to collect tax for each one of those states.
Right. And Mark, one more thing, typically it's a look back period. So it's not like all of a sudden you hit $100,000 if that's the threshold in the state, and then you have to do that right then. Typically it's a look back period that the states use. And again, each one of them is different. So I can't specifically say which ones are which, but that's usually kind of the way they do it. Is if in the previous year you hit whatever the limit was, like if it was 100,000, then you're going to need to know that in the next year you're going to have to register and start collecting and filing.
Right. Awesome. Thank you. Thank you.
Mm-hmm.
Okay. So determining whether or not you are in a position where economic sales tax exists, right? There's 3 questions, right? The first one is number 1, does that state charge tax, right? Because as Jen pointed out, there are certain states that do not at all, right? That you won't be obligated to at any point in time have to manage and be obligated to collect tax on. 2, what is the state's threshold for sales tax nexus? And again, as we pointed out, you could see that different states have different thresholds, and to Jen's earlier comment, they will change, right? It's all independent state decisions. And then the third one is, have you met that state's threshold, right? So these are the 3 questions you want to be able to ask yourself and determine at what point in time, if and when you might be obligated to start collecting tax. So when you think about it from an e-commerce perspective, right, how do you determine, so when you have a physical nexus versus an economic nexus, right, what are the guidelines that you use to determine if such scenarios exist, right? So generally speaking, it's going to be largely dictated and controlled by where you're shipping to, right? Assuming that you're selling online, right, because this is an e-commerce session, so you're selling online and you're shipping to a location, right? That a physical nexus will be determined when the locale of what the customer shipped, right, is equal to the shipping from there's a location of equivalence that you're shipping from, right? And in that case, you'll need to collect sales tax. So drilling that down a little further, right? So again, I gave you an example before. If we have an office and a warehouse in New York and we're shipping to Florida, right? That is not a physical nexus, right? Because they don't have a physical presence in Florida. However, let's say I have an office in New York, I have a warehouse in New Jersey, and I have another warehouse in Texas, right? And if somebody from Texas buys from me, even if I'm shipping to them from my New Jersey warehouse for some reason, I am still under a physical nexus mark, and I am responsible to collect tax, right? So, and that's another thing too to understand is it's not necessarily exactly that I shipped from that physical location. It's that I have that physical location as part of my corporate umbrella. So therefore, you know, again, whether I shipped from there or not, I am obligated to collect that tax.
And one of the most common ones is like if I'm based in Florida, I'm the seller and I'm based in Florida, and then I sell to a customer in Florida, then I'm going to have that nexus because it's hitting both of those, physical and, you know, you're going to have that physical nexus before you even hit economic nexus in Florida.
Exactly. And then on the flip side of that, right, how to determine if I have an economic nexus for e-commerce is when they don't match, right? Like I don't have a physical presence where I'm shipping to, right? So I have, you know, my physical locales or my physical presence for my company is determined by my New York office, my New Jersey warehouse, and my Texas warehouse. And that's all I have. And I'm shipping to California, right? So that is not a physical nexus. I am not obligated to collect tax. I am in an economic nexus scenario as long as I haven't met the thresholds to have to pay tax. And so in the meantime, what do I do in that situation? Is I track the nexus thresholds by state, you know, for California in my example, based on whatever their indicators are, combination of sales and transaction volume. Okay, so as we move forward, now let's talk about how we take the concept of economic and physical nexus and how do we manage this in QuickBooks. When you look in QuickBooks, you're going to find as we go through this, there's some challenges, right? Because, you know, we're talking about multiple addresses, right? And multiple physical locations, which are triggers to determining whether you have physical nexus or not, right? And for those of you that have, are very familiar with QuickBooks Online, you know, there's a limit to addresses, right? As an example here on the account settings screen that I'm showing here, there's pretty much one default physical address, right? And that's the company address. And whatever you put in that company address field, as you likely know, is when you go and create, let's say, a sales receipt inside of QuickBooks, it takes that address and uses that as what they call the shipping from address, right? The way QuickBooks works is when they determine if that sales receipt should be calculating tax or not is based on whatever shipping from address is here, which in this case is a New Jersey-based address. If my customer shipped to is New Jersey, the sales receipt will assume and expect to calculate tax, right? If, however, I'm shipping from New Jersey to, again, California, then it will not. Then it will not expect to calculate tax. It's very straightforward, black and white. Limit, though, generally does off of one address. And we'll come back to that in a minute, but right now we just want to kind of give you the introduction, right? So how do you manage this information inside of QuickBooks, right? So again, you may be familiar with this, maybe not, it's maybe first time for you, but when you go into QuickBooks Online, right, there's on the left side, there's a tax menu option, and when you hover over it, there's a sales tax option right there that you can click, and then that will bring you into a tax area, right? Before I go into that, what I'm showing you is that on a sales receipt, again, as I was just explaining, there's the concept of physical nexus, right? And this is all stuff that QuickBooks will do automatically, right? So it's just important to know that because if you're entering sales receipts or invoices and such into QuickBooks manually, right, you're going to find that this is how it's going to behave. And you should be expecting this, right? So if I, again, have my shipping from address set to New York, and I wind up with a ship to of a customer here that also is New York. So now we've matched New York to New York. We're indicating we have a physical nexus inside of QuickBooks. So QuickBooks then is going to assign tax, and it's going to wind up getting calculated and tracked inside of the tax agencies that you set up inside of QuickBooks, right? And this is active and expected of taxes that you're collecting and paying, right? Based on, how you've set up your payment schedule. Jen, is there anything you wanted to add to this?
No, this is pretty straightforward.
Okay, great. Then you also have if you've seen inside of QuickBooks, right, you can go into the tax agency section and you can get a list, right? So if you're familiar with this, you've seen it, right, where you set up and you can set how you file and your periods and stuff like that, right? Then just other tools that are available here for you to be able to determine, how your taxes are calculating and what you're obligated for. There's obviously a sales tax liability report you can run. And this is all, again, based on taxes that you're collecting and paying, right? Where you can run your reports by tax agency. You can also drill in and see the transactions, the actual individual transactions that make up those numbers, right? So if you want to verify that the taxes are correct, right, you can go in, you can look at what the expected tax amounts you're supposed to pay a particular agency are, drill in, see the actual, in this case, sales receipts and refunds that go against that calculation in the individual tax amounts, all reports that are available to you inside of QuickBooks that you can use to manage this on the physical perspective. Now, what people may or may not be as familiar with is the economic side of how QuickBooks helps you manage, right? Where taking a sales receipt again, that shows a scenario where we have a shipping from that's coming from New Jersey that's going to ship to Illinois, right? Where they're not going to be the same. So what QuickBooks is going to do is QuickBooks is, in this case, going to say you're shipping to a location that's not matching my physical location. So by default, it's not going to assign taxes. It's not going to collect taxes on here. And then it winds up not coming into your tax agencies, but you'll notice there's this button here on the right, Economic Nexus. And when you click that button, it takes you into this Economic Nexus management tool in QuickBooks, which is actually pretty good, right? When you get it to work the right way, and I'll explain that in a bit, where it will show you here at the top, the different states that you have agencies for that you're collecting taxes on today. And then beneath that, in alphabetical sequence, it shows you all the other states that you haven't set up agencies for, along with, over periods of time, what your current sales in QuickBooks are for that state, how many sales you've had, and if you've met the threshold or not. In fact, if you hover over, where it says threshold measure, if it says no, if you hover over it for that state, QuickBooks will even show you right then and there what the current threshold is. So for Connecticut, I have $145 in sales, which is a long, far distance from, meeting the requirement of $100,000 in sales and 200 transactions, right? But it's all right here in that economic section. Again, if you're not familiar with it, it's kind of cool. I'm going to go back and show you again. So when you're on the tax screen here and you're looking at all the, the tax agencies you set up, just look to the right and there's this button, Economic Nexus. And when you click it, it'll take you into this report right here. And then you can see all the other agencies. Now, how does the sale get included in here? Simple. Back to this here. When you have a sales receipt where the shipping from address does not match the shipping to address, QuickBooks by default will interpret that as an economic nexus and will add it to that report instead of collecting taxes on it. All right, so let's go back ahead. All right, so now let's play a game and let's test your knowledge, right? Let's see if everybody's been paying attention, right? No killer questions, but we're gonna ask a few here and see how you do. So pop quiz, right? My daughter loves pop quizzes, so let's throw it out here. Question number one. You have a corporate office in New York and an e-commerce order is shipping to a customer in New York. What scenario are you facing? Is the answer to this, you're going to collect sales tax now, or you're not going to collect sales tax, you're just going to track the economic nexus? And I'll give you guys a few seconds to think about it. Again, you have a corporate office in New York and an e-commerce order has been placed that has to ship also to New York. Are you responsible to collect tax, or are you just going to track the economic nexus? And the answer is collect sales tax now, right? Because you have established a physical nexus. You're shipping from New York, or you have your office in New York. You could be shipping from California, doesn't matter. You have an office in New York. You're shipping to a customer who bought in New York, and therefore you're responsible and obligated to collect tax. Question number two. You have a Shopify store based in Illinois, right? So that's your corporate address. You have a warehouse in California, and a customer orders from your Shopify store, and you're shipping to that customer in California. Doesn't matter where you're shipping from. Maybe I even have some samples in Illinois that I'm shipping direct from Illinois to California. But I have a Shopify store based in Illinois. I have a warehouse in California, and I have a customer that ordered to me, and I'm shipping to that customer in California. Am I collecting tax now, or am I just tracking economic nexus? And the answer is collect tax now. Very good. Sure, everybody got that right. Okay, so let's look at question number three. You have a Shopify store based in Illinois. You have a warehouse in California, right? That part's the same. I have a customer that orders from my Shopify store, and I'm shipping to Ohio. Am I collecting sales tax now, or am I tracking economic nexus? Give you a few seconds to think about that. And the answer is track economic nexus, right? Why? Because I don't have a physical presence in Ohio. I have a physical presence in Illinois, and I have a physical presence in California. Because I'm shipping to Ohio, I am not obligated to collect and pay tax at this time. What I need to do is track the economic nexus until I reach a threshold that Ohio determines that at that point, I will start needing to pay tax. And as Jen pointed out, it's what we're looking. Okay, and then we throw a bonus question in. Bonus means trick question, FYI. Let's see if you guys get this one. You have a corporate office in Montana. My Jersey accent, by the way. Montana. You have a corporate office in Montana where there is no sales tax, right? right? So that's where my corporate office is. I have a warehouse in Texas, and I also have a warehouse in New Jersey. Am I obligated to collect tax now if I'm shipping to someone, let's say, in Montana, or am I tracking economic nexus? The answer is there's no sales tax obligation, right? Because of the fact that there's no sales tax collected in Montana. Okay, great. Hopefully you guys scored perfect score on that, which I'm sure you did. And let's move on to the next section. Okay, so now we talked about, the basics of sales tax. We talked about, what is this, sales tax nexus thing, right? Physical and economic. How do you manage it inside of QuickBooks, right? If you're just going into QuickBooks, you're doing it all manually. Now let's talk about what happens when you try to deal with it from an e-commerce perspective, right? When you're like in real life, right? When you want to integrate e-commerce into QuickBooks, for example, what kind of problems you're going to run into, right? And why it's a little bit of a challenge, right? So first problem is what I mentioned before, right? Is that QuickBooks only supports one default physical address, right? So when you're dealing with sales receipts, anytime you create a sales receipt inside of QuickBooks, by default, it's going to pull that corporate address, right? But the problem is, if you look at, let's say, Shopify, for example, and we're going to focus on Shopify because we do a lot of work with Shopify, but whether it's Shopify, BigCommerce, Amazon, right, it's all kind of like the same problem, right? Is that in Shopify, you might have 3 addresses, right? In QuickBooks, you only have 1, right? So think about it. If you were trying to integrate and an order is placed on, let's say, on Shopify, and my default company address over here is New Jersey, right? And here in Shopify, like we don't even have a New Jersey address, but let's say we ship to someone in Massachusetts, right? When that order comes in, right, whether you put it in manually or you try to integrate it into QuickBooks, and QuickBooks is going to pull that default New Jersey address as the shipping from, you're going to charge tax in Shopify, right, as you should, but QuickBooks is going to think it's an economic nexus because the shipping from is New Jersey and you're shipping to Massachusetts. So it's going to potentially track it wrong, right, if you're not careful. So you just got to be aware of that. And often that would require you'd have to manually go change that shipping from address to get it right. So the basic problems are this, right? So the shipping from address has to be managed manually on a sales and refund receipt when there's more than one physical location, right? So if you're dealing with the transactions, again, you have your sales on one side in Shopify or Amazon or BigCommerce that could be calculating all the tax nexus information correctly, right? Because it has access to all the addresses. But when you try to bring that into QuickBooks, there's only one physical address. So regardless of what Shopify said, QuickBooks, especially with their automatic, sales tax calculations, are going to have a different, they're not going to be in sync. And if you've tried to do this, you might have already experienced this, or people that have run into this problem, because it's a very common thing. Even if you get it right, even if, let's say, there's no difference in addresses, you also run into a situation where sometimes the e-commerce platform calculates tax and a little, I don't want to say different, but there's a rounding philosophy, right? So sometimes, let's say Shopify, for example, might round it one way. QuickBooks might round it a different way. The core transactions and how it's calculating sales tax might be the same, but because of the rounding differences, you might find that sales tax in Shopify versus sales tax in QuickBooks is off by pennies per order, which, if you're dealing with anybody that has a lot of orders, that adds up. That's the second issue. And the third problem is when if you don't have the right way of managing the physical nexus inside of QuickBooks Online, meaning the addresses are coming in wrong and you're not taking the time to manually update them, right? It's going to prevent QuickBooks from properly being able to manage the economic side, right? So it's going to be a mishmash of things on Shopify. You're collecting taxes where you should be and you're not collecting taxes where you're not. And then you're looking at QuickBooks and you're going to be like, what is going on? Because it's going to be completely different. because again, QuickBooks has that limitation of only one physical address versus a Shopify store could have 2 or 3 or 4 physical addresses that could be tracked. And so Shopify or Amazon might be doing it the right way. QuickBooks doesn't know any better. So unless you deal with it manually, you can be in a situation where it may never come out correctly. Oh, sorry, we did the slide already. I apologize. Okay, so how do you manage it then, right? How do you manage it in e-commerce? Well, you got basically 2 options here, right? You could either do things manually, right, where you can edit the shipping from right at the top of the sales receipt and change it. And if you do change it, like let's say, in the scenario I was talking about, you're dealing with New Jersey, right? And it should be, Massachusetts. So you can change the address to Massachusetts at the top of the sales receipt, and then QuickBooks will act accordingly and automatically add the sales tax. Or you can leave the address and, you can override the sales tax at the bottom. You can change that manually. Or you can use an app that can integrate and manage the physical locale for you on the sales and refunds automatically and properly, which is what we do with We Integrate. So I'm gonna just show you real quick what that looks like, so you can understand kind of like those differences, and just take like about a minute or so, and then we'll go to the rest of the presentation there. So if I'm in, let's say I'm in Shopify here, and I have a Shopify store. And let's say I go and let's just order. I'm going to start with an order here. Now, let me show on the back end real quick. Let's talk about those addresses. So if I come in the admin side of Shopify and I go under settings here and I click and it opens up and I go into locations, right? You'll see I got 3 locations set up here, right? Plus I have my store location here under, store details, right? Where I have my store location here, right? So New Jersey. So I have 4 different locations set up in Shopify. So Shopify knows how to interact with that. So if I go to my order and I go online, let's say I'm a customer now and I'm going to add this blouse to my cart, and I'm going to add these shorts to my cart. And let's go view that cart. Right, so we have 2 items here totaling $60.99. Let's go ahead and check out. And here's the order. Now, before I process this, let me come back to QuickBooks real quick. Need more time, QuickBooks. All right, so you'll see here, the New York tax is at $19.92, right? So that's collectible tax, right? So now if I go over back here to my order, and we're gonna have a customer now place an order from New York, where I showed in my addresses, I have a New York address, right? So by rights, Shopify and QuickBooks should be helping me manage those taxes. I will just save this for next time, and I will continue to shipping. Now, when I go to shipping, you'll see, look what Shopify did. Shopify automatically added the taxes because it knows that I have this physical Nexus scenario, right? I have a physical presence in New York, and I'm shipping to a customer in New York. We'll just leave the taxes basic here. For $15, we will add a quick John Doe bogus credit card, and then we will process that order. Okay, so the order's gone through with the tax for $6.76. Now, let's go ahead and continue shopping, and let's do the same exact thing. This time, let's do it for a customer where there isn't physical Nexus, right? So let's go back. Take the same exact items, we'll add them to the cart, take on the shorts, add them to the cart, view that cart, and you'll see, if you remembered from before, it's the same subtotal of $60.99. We'll go to checkout. And now this time, let's pick somebody new. We'll say Stephanie Sotheby, right? Sotheby. And we'll say Stephanie's in Chicago, where I don't have physical Nexus, and I'm just going to make up an address here, 10 Main. I'm sure there's a 10 Main Street somewhere in Chicago. The important part, as far as Shopify is concerned, is that I put a valid zip code in, which I have one handy. And I'll do that. Nope, I messed up. Oops. save that for next time, and we'll continue to shipping. Now you'll notice when I did this for New York and I went to shipping, Shopify automatically added the taxes based on the tax agencies for New York. Here I'm shipping to Illinois, and Shopify knows that I don't have a physical presence in Illinois. Therefore, there is no taxes here at the moment. Now, I'm going to show you something else here real quick. If I come back here to QuickBooks, now our system is so as I'm processing these Shopify orders, what I didn't mention to you is that we have WeIntegrate over here, and WeIntegrate is sitting between Shopify and QuickBooks, right? And this is the order that I just processed for Nancy Contact, right? That $60.99 order with the shipping and taxes of $82.75, and it's already loaded into QuickBooks. And the reason why I show you that is if I refresh here, sometimes it takes a little bit longer for QuickBooks to make their updates. They might have to come back and do this again, but you should see, drum roll please. Leave it to QuickBooks to slow down my presentation, right? Second. Come on. There we go. So you'll notice the sales tax for New York has now increased automatically, right? So because of that integration and the the nature of being able to manage that physical nexus between Shopify and QuickBooks, we were able to help QuickBooks determine the proper way of updating the physical taxes that I owe based on that sale, right? So it increased, it looks like about $7, $8 there, right? Which is what it was, $676. All right, so now if I go back here, what I want to show you before I go back is if I go to the economic nexus for Illinois, right? If I come down here, because we're going to process for Illinois, you'll notice that currently we've had $745.92 in sales. We've had 20 transactions occur. We have not yet met the threshold, which is $100,000 in sales and 200 transactions, right? So now that you've seen that, let's go back to the store. Let's finish the sale, right? So we're shipping to Illinois, and we're going to continue to payment. Put that card number in. Right now. Okay, so process that order without tax this time, right? And then we'll just give QuickBooks a moment to kind of get themselves together, because it might just take a little bit for them to process it here. But in the meantime, what I want to do is let me go over and see if I can show you the details of that first sale. So you can see, so this is the sale that we automatically loaded in here from Shopify. So click the edit button, bring up the details. Okay, so you'll see here, right, that what we did was when we loaded that sale, in the ship from, we pulled the address from Shopify and put the Shopify New York address in here and the shipping from automatically. So it matched the fact that there's a ship to address in New York. So it helped QuickBooks understand that this is a physical nexus, right? We're shipping from New York to New York. And therefore, it was able to maintain the fact that there's a $6.76 tax, right? And the totals and all the taxes and totals and everything ties out to the penny flawlessly. And then it was able to take that $6.76 and add it to the tax that you're supposed to pay, right? So now if I refresh QuickBooks here again, let's see if that other sale transaction we processed has come through yet. Our integration, by the way, with WeIntegrate is instant and real time, right? Or as real time as it can be. So the second someone puts a sale in Shopify, it will be processed, and as fast as Shopify can move it down the pipe and QuickBooks can accept it, it loads, and you can see here's the second sale already here for $75.99 without the tax. And if I go and edit it, just so you can see the differences of how the sales receipt looks now, right? Because this is what you'd either have to do manually or like a system like WeIntegrate can help you do. You'll notice this time, right, we're shipping to Illinois, and you'll notice, remember on the last one, the shipping from said New York. Well, it doesn't say New York, it just says New Jersey because that's the default address, right? So we couldn't find a physical match because there was no Illinois physical location in Shopify. So it just went for the default, which shows that you now have a shipping from New Jersey, a shipping to Illinois, which creates an economic nexus scenario inside of QuickBooks. And now QuickBooks knows what to do with this. And you'll see there's no tax here as well. So it ensures that everything between Shopify and QuickBooks, number one, matches to the penny, right? And then when we come out of here and we go back to the sales tax nexus management tool in QuickBooks, and I go into economic nexus, see if it updated yet. Yeah, you'll notice. So before, this number here said $745.92, and there were 20 transactions. Now it totaled up, it added that sale that we just processed of $75.99, and now we're at $806.91 and 21. So it incremented Illinois automatically for you, and that's kind of the value of what you would have if you have an automated integrated tool like We Integrate that can handle that, physical and sales tax nexus for you, or be prepared to do that yourself manually, which is, kind of like the other option there. Okay, so let me go back to the presentation where we left off. And we'll leave a few minutes here for some questions. Just as a recap, so managing sales tax nexus in QBO, right? So, being able to deal with e-commerce, right? If you're planning to service e-commerce customers, or you already are, right? Or if you're an e-commerce business, right, you deal with this yourself as well. You're going to experience physical and economic nexus. It's going to happen, right? It's just part of e-commerce and, managing tax, right? So it's essential. You're going to come across it. Being able to manage it and understand it is going to happen, and you're going to need to do it. Making sure, to Jen's earlier point, that you are staying on top of the sales tax requirements for each state or locale is very, very important, because they do change. It's not like they change every 5 minutes, but they do change, right? And you're gonna have to stay on top of that and know where those thresholds are. Again, nice thing about QuickBooks is if you can get it to work the right way, by either using us or except for the fact you're gonna do it manually. When you get it in the right spot, like whether you're paying taxes on it now or you get it in the right state so QuickBooks can calculate, help you manage the economic side of it, QuickBooks becomes a good resource for helping you know what those thresholds are. And QuickBooks does update it, right? So it's kind of a cool reference. However, right, the challenges, right? So it's very simple if it's like one address, right? So if you have, a Shopify store that's in New Jersey, you ship from New Jersey, and your QuickBooks address is New Jersey, like these problems I'm pointing out, you're not going to have, right? It's only when you get into other, right, scenarios where you're going to have a different warehouse, or you're going to have a remote employee, or you're going to have anything that's going to constitute additional physical nexus, that's when you have to be careful. And basically your two options are either you address it manually, or you get an app that can automate that for you and help you manage that without you having to worry about it, and keep you abreast and making sure you pay the right taxes at the right time. So that said, we're going to open up for questions. Just want to thank you for attending today's presentation. If there's anything that Jen can help you with, again, she's a authority on sales tax and tax nexus. She has a free consultation available up on our website. You can check that out. And if anybody's interested in learning more about how We Integrate helps manage the economic and physical taxes for you automatically, like I just demonstrated, and more, you're welcome to give us a free try. Anybody that does sign up for a free trial by this Friday, you will qualify for a 20% discount off your first 60 days. And by the way, that's on top of the fact you first get a 15-day trial. And then if you proceed to your first 60 days of billing, you'll get a 20% discount. I would ask you to contact me either through that email that's up there or our contact us form off of weintegrate.co, so we can make sure that we get you that 20% discount. But other than that, it's been a pleasure, and let's see if we have some questions we can answer for the next 5 minutes or so.
Thank you for that, Mark and Jennifer. We do have a question that comes to us from Andy. The question is, does having inventory higher than threshold in a third-party warehouse in Florida create a nexus for a Nevada company?
Okay. I will state, first of all, that the inventory does not have a threshold. So it's one of those yes or no things. If you have any inventory, whether it's $5 in a state in a warehouse, that is going to put you having that physical nexus. But when he says it's third party, there are like 20 states. Nevada and Florida are not one of them, but there are about 20 states that if you actually have inventory, and even if it's a third party or like a marketplace facilitator, it will constitute physical nexus. But it's kind of one of these things. We always say, it depends. It's still one of these things, that is the answer, but I would still double check just to make sure. But more or less, because you're dealing with Florida and Nevada, and those states are not ones that have that physical inventory, even if it's a third party, you should be okay. Does that answer that?
Yes, thank you.
Andy, okay. Okay, were there any other questions?
I don't see any more in the chat, but certainly if folks, you do have questions, you can take yourself off mute and ask them directly, or put them in chat and we'll be happy to ask them for you.
Okay.
Also, if you think of questions after the fact, go ahead and post them on the event page and we will get them answered for you as promptly as we can. We have also gone ahead and recorded this event so that you will have reference to that. And Mark, if you want to share your slides, we can add those slides to the event as well. It is 3 minutes to 3. If nobody has any more questions, I'm going to go ahead and okay, Franklin.
Just in the wire.
Sorry,
Okay.
but this, I'm not sure if this is a question for We in the Trade or QuickBooks. So I know QuickBooks as a app for connecting Shopify to QuickBooks. Does We in the Trade, if I subscribe or a client of mine subscribe to We in the Trade, does We in the Trade replace that app?
Yes,
connection.
frankly,
Yeah.
yes,
Okay.
we integrate would replace that integration.
Integration. Okay.
Yeah,
And the next part, it's a multi-part question. The next part of my question is, I was told that with QuickBooks app for connecting Shopify can connect several stores to one QuickBooks subscription. Does We in the Trade do the same thing? Can We in the Trade connect several stores to one QuickBooks subscription?
Yes, frankly, that is correct. So We Integrate will connect. There's no limit to the number of Shopify stores that you can connect to one QuickBooks account.
Okay, one last.
Yeah, please, by all means, please.
One last. So it seems like the discussion or the training was about sales and tax. Does We Integrate also, because I'm not sure if I'm asking the right question either. Shopify or a business owner doesn't just have sales, it also have payables, right?
Like bill payments?
Yeah, like bill payment. Does We Integrate also communicate between QuickBooks and whatever bill paying software, or if Shopify also have a module of bill paying, does We Integrate also communicate between those?
So We Integrate currently is not set up to manage bill payments. There are other apps out there that do that, and happy to speak with you offline about that and give you a couple of choices that you can choose from. But yeah, we're focused primarily on the sales. And to the point of your other question about replacing the connection tool that the Shopify QuickBooks connector that's there. Ironically enough, their connector is not capable of managing the tax nexus stuff that we talked about today. So that would be an advantage, step up for you if you were able to leverage that through WeIntegrate. But again, it all depends on what you need. Like if you don't have to worry about that, then you don't need that. But if you do have a situation where you have to worry about physical and economic nexus, which odds are eventually you will, something like WeIntegrate can help you with that a little bit better.
Thank you very much.
You're very welcome. Great seeing you again.
Okay, if we don't have any more questions, it is at the top of the hour and we're going to go ahead and end this event. I want to let everybody know that you are an unstoppable force of nature and everything you need is within inside of you right now. Keep that in mind while you go out through your day today. And if you have any questions, like I said earlier, for Jennifer, Mark, and
Gennady.
Please let us know. You can, again, like I said, reach out to them directly, or you can post it on the event page. I know Mark is very active on our Alignable group, so he does check that quite regularly. Yeah, I can't say the word, whatever. So everybody have a wonderful day. I'm going to go into the next event, and I am stopping the recording at this time.
Great. Thank you, Kim, and thanks, everybody. Have a great day.
All righty. Bye-bye now.
Bye-bye.